What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had another bullish day in the stock market and we're going into the big tech earnings week, so look out for a lot of volatility. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we went up 0.25% and we did reach the next price target at $441. So the question is, are we going to pull back from this level to close the gap at 436, or are we going to blast right through this price target and continue on to the next one? So the next price target is just above at 446, and we are back above that support trend line for the second day in a row. So if I switch over to a 1 hour chart, you can see the price action did break back within that support trend line, and that trend line is acting as support once again. So that is a bullish breakout for the S&P 500, but we are coming into resistance at that price target at 441. You can see we closed the day right at that price target because the market loves to keep us guessing on what's going to happen the next day. So from this level, we could see a breakdown to close the gap, or we could start breaking out and running up to the next levels of resistance. So remember, you always want to be cautious when we're at all-time highs and reaching price targets. That doesn't mean we can't go higher, but don't take on too much risk when we're coming into price targets like this. We still have plenty of downside support, but you want to let the price action do all the talking. So right now we still have bullish price action with the bull trend, and we do have the gap, which will be our strong support level at 436. Below 436, we still have our 20 simple moving average of support, which is now above $433 as this bull market continues to grind higher. Critical support goes higher with our 20 simple moving average because we do have that positive slope, and that's why this bull market will continue to be so strong. So as long as we have this bullish trend, we want to remain bullish in a bull market, but do remember it is big tech earnings week, so if you do start to see volatility and you start to see selling, you will want to watch these critical support levels very closely. So 436 and 433 will be your critical support, and if we break below 433, you're looking for support at 430 and 428. Our 50 EMA continues to climb and it's now sitting at 426. So overall, SPY still looks bullish and we are continuing to melt up on low volume, which is completely normal. Remember, the stock market takes the stairs up and the elevator down, so you will see the stock market melting up on low volume. It's possible we get a fear of missing out rally at all-time highs, and that does trigger a short squeeze above resistance. So look out for that, and that could be the fuel needed to get us to 446. On the NASDAQ 100 triple Qs, we were pretty flat today, basically going nowhere, going up 0.08% and closing for the second day in a row over that price target at 367. So that does validate we're very likely going to see the next price target above at 370. So you'll now have support at the previous price target at 367 and right around our previous all-time high and support trend line at 365. We have strong support at 363 and our 20 simple moving average is sitting at 360. So we still have a ton of support below in this bull market. The price action is trading near the upper Bollinger Band, and that is causing some resistance, but those Bollinger Bands will continue to expand, allowing the price action to run higher. So look for the expansion of those Bollinger Bands and watch those critical support levels. If we break below 360, that would be a warning sign that the market could be rolling over, so watch that critical support closely. On big tech earnings, there's always the possibility of a sell the news event, even if the earnings is good, but if too many people are expecting the market to sell off, it's very likely going to do the opposite. So don't go with what the majority are saying because the majority are typically going to be wrong. Just continue to follow the price action and the trend and block out the noise. On the Dow Jones, we were up 0.24% today, and we did see the Dow Jones breaking out to a brand new closing all-time high. This breakout was predicted, and I did tell you to look out for this because a lot of those Dow Jones stocks were very beaten up and they're starting to recover. So now that we're breaking out over 351, our next price target will be above at 355. Remember, the Dow Jones has the full bull trend and the price action has been forming higher highs and higher lows. Look for support now down here at 350 and the gap close at 349, and our 20 simple moving average is now sitting at 347. Remember, all of these indices are in full bull trends, and I still do think we're in that summer bull rally, so I'm not expecting to see the market roll over at this time. However, I could easily be wrong, so watch these critical support levels because that's going to do all the talking. Remember, opinions are absolutely useless in the stock market. You want to let the price action do all the talking. So these charts are still bullish, therefore we're going to remain bullish in this bull market. On the Russell 2000, we were up 0.29% today, and we still see the Russell 2000 in a bear market. All the moving averages are stacked to the bear trend side with the price action still below the 20 simple moving average and the 50 EMA, So there is no doubt the Russell 2000 is in a bear trend. Now the thing about the Russell 2000 is it is starting to show some strength. We're holding above this support level at 219, and we are starting to see the 5 EMA positively sloping with price action over the 5 EMA now for 2 days in a row. However, the larger degree trend is still bearish, and we're still below that critical resistance level right around 224. So on the Russell, be cautious of the bear raid because they will continue to short at resistance. There's no coincidence the Russell 2000 is failing to break above resistance at 222 because that's where the bears are short selling the Russell. If we get above 222, you're looking for resistance right around 224, and above that, the bears will likely go away and the bulls will start to take over. So watch that battle between the bears and the bulls at resistance, and you will see who is winning the battle and you'll know which direction to trade on the Russell. Do remember the bear trend does favor the bears, so I would expect to see the bears continue to raid the Russell until they lose the bear trend. On the ARKK ETF, we do still look like we're finishing out that correction and we're starting to see a bull flag forming above critical support at 120. Remember, ARKK does not have a bull trend, but it is holding over critical support, and it could be coming out of a possible correction that already ended. So right now, watch that critical support at 120 because as long as ARKK is over that support, I am bullish on ARKK. We're looking for a price action break above 124, and then we could easily start running to the next resistance levels at 128 and 130. If we break below 120, you're looking for support off of 116, and below that, we're more than likely coming back down to retest support at 112. So watch those critical levels because we could be seeing ARKK going back into a bull trend very soon. On the VIX, we were up 2.33% today, and this is a day that we see the S&P 500 going higher as well as the VIX going higher, which is a divergence. This is usually a warning sign, and this tells us the stock market is currently climbing the wall of worry. The higher the stock market goes, the more defensive everybody is getting, and we are seeing fear starting to rise. The VIX should not be going higher with the S&P 500, and this is a warning sign that something could be developing underneath the surface. If we continue to see the VIX going higher while SPY is going higher as well, we will have to be cautious of a potential sell-off. So we'll continue to watch that closely, but right now we still have the VIX below critical resistance at 18.2 and 20. Remember, the VIX needs to get back over 20 to even consider a correction, and at all-time highs, we're not even looking at a potential correction at this time. We still would have to look at a potential pullback before we call it a stock market correction, and we would have to see the price action confirm the rollover. So right now, watch the VIX, and if it starts getting back over 20, look out for a lot of volatility. Otherwise, look for the VIX to continue to get crushed back down towards 14 as the market continues to climb higher to all-time highs. On TNX, I don't see anything out of the ordinary, and we still have the bear trend with the price action drifting lower. Remember, low rates should continue to favor the tech sector and the growth stocks that are in the ARK ETFs. On TLT, we're currently sitting right at support and we still have the bullish trend, but I don't see any abnormal price action. We're currently drifting sideways around this support level, and I don't see any reason to believe that the bond market is signaling off a sell-off. On the dollar, we're currently trading below the 5 EMA, but we still have the bull trend and the price action is still bouncing off the 20 simple moving average. If we can see the dollar start rolling over and closing below support, we could see strength in gold and silver once again. On gold, we're still going basically nowhere above that support level right around 1790, and we need to see gold getting back over the 50 EMA at 1811. Remember, we got rejected off resistance at 829, and we need to break above that level to get to 1876. Otherwise, we're coming back down to the support level at 1776. On silver, we're trading above that critical support level at 25.1, and if it does break down, remember we could be coming back down to 23.5. Above that, we have resistance at 25.8 and the 50 EMA at 26.1. On Bitcoin, we're currently trying to break out and we're up about 5%, and Bitcoin did get back over the 50 EMA at 35,000. You could see we're currently getting rejected at resistance at 39,000, and we need to form a daily higher high above about 41,000. So Bitcoin, while it is seeing a very bullish breakout, it's not out of the woods yet. Remember, we need to stay above 35,000 and we need to see the Bitcoin bulls proving themselves, and we need to regain the bullish trend. So right now, if you have not been buying Bitcoin off this critical support level of 30,000, you should not be chasing Bitcoin at these levels. I've been talking about buying Bitcoin off critical support and accumulating at these levels for about a month now. And if you were too scared to buy at support, you should not be buying at resistance. This is not the time to chase a parabolic rally because it still could be a bull trap. It does look like a breakout and it is looking bullish, but you've basically already missed the move if you're trying to buy at these levels. So right now, let's see if this breakout can retest as support and get a confirmation bounce off support. And if the bull market continues to rally, that could be the next buy signal that Bitcoin is going much higher. So the next critical resistance levels to break above will be 39,000 and 41,000, and the critical support level is now 35,000. On Amazon stock, we had a bullish day going up 1.18%, and Amazon continues to look very good here. We do have the bull trend, and we did bounce off that support level at 3,500, and we're seeing a textbook bull rally. We're very likely going to retest the previous all-time highs and then potentially break out and get to the price target at 3,800. So look for that going into earnings, because Amazon typically does very well on earnings, and there's no reason to believe the bulls won't speculate going into that report. Look for downside support at 36.52 and the 20 simple moving average at 36.04. On Tesla stock, we did get earnings report after the bell, and we are seeing Tesla going up 2.21% today, and we're back over that critical support at 649. Remember, Tesla needs to break out above about 658 and then break out above 692 to really get this bull run started. If Tesla breaks down below critical support at 649, the next critical support level will be 626. Below 626, Tesla will be looking bearish, and it's very likely coming back down to retest support at 594 or 546. However, if Tesla can hold above 626 and start breaking out above this 20 simple moving average around 661, we could see a bull run, and remember that Tesla is being a laggard stock in the triple Qs. So right now, with earnings out of the way, I'm looking to see if Tesla can break out above 692 and start running up to our price target in the 760s. Look for that critical breakout above 661 or the critical breakdown of support below 626. On Apple, we were up 0.29% today, and we see Apple back above that resistance level at 148, so we're now retesting all-time highs around 150. Above 150, we're likely going to the price target above at 156, and we still have a very strong bull trend in Apple. Look for support at 148, 145, and our 20 simple moving average breakout level at 143. All of these are very strong support levels, and we have a very strong bull trend, so there's no reason to believe that Apple won't continue to climb going into earnings. Remember, earnings is coming up soon, so don't do too much gambling around earnings season. You really should have been riding these stocks into this day, and now you should be taking some profits. Look for a potential run to 156, and then we could be looking for a pullback off of that level. On the financial sector, we were up 0.58% today, and we're back over the 50 EMA, but we still see the financial sector consolidating and going sideways. On the industrial sector, we were down 0.05%, and we still see price action over the 5 EMA and a full bull trend. On the healthcare sector, we were down 0.65% today after getting overextended outside the upper Bollinger Band, and we still have the bull trend with the bullish price action. The energy sector was up 2.47% today, and we see the energy sector back over the 5 EMA, but we still are in a bear market on the energy sector. We have the full bear trend in the price action still below the 50 EMA and the 20 simple moving average. So jumping back over to SPY, remember that we did close right at resistance at 441, and we need to get a confirmation breakout to get to the next price target at 446. So watch for that potential breakout, otherwise we could see a rejection at this level and come back down to close the gap. The gap at 436 should be strong support, and we're going through earnings, so we really could go either direction, because there's always the chance that even if the earnings are good, you still get a sell the news event. However, remember, you don't want to assume anything. You need to let the price action do all the talking, and right now the price action is still bullish. When we have a bullish price action market with a bull trend, you want to remain a bull in a bull market. I can't stress that enough, that now is not the time to be shorting this market because it still looks very bullish. Also remember that I have my trade alert service that only trades TQQQs called BANC Trade Alerts. It's very simple to follow, and it does very well in every single type of market, and I'm currently running a 50% off promo code for your first month. If you're interested in checking out BANC Trade Alerts, you can find out all of the details in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and always stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.